Hi everyone, and thank you for joining us in a weekly wrap-up webinar brought to you by the Dukascopy research team. Now, first of all, let me just welcome you, and I hope you're going to enjoy our today's session because we're going to provide you with the latest data that will be relevant and hopefully relevant to your daily trading. Now, first up, we're going to have a look at the major events that happened this week and continue with an expert commentary from Arne Lohmann Rasmussen, head of FX strategy at Danske Bank on the euro dollar, one of the most traded currency pairs. Afterwards, we're going to continue with the market research on the Japanese yen. And in about 25 minutes, we're going to have a look at the US PPI and what is the market reaction prior to the release of the data, and finish off with the trend pattern idea. But always just to remind you, we have the chat section on the left, so in case of any questions or comments, feel free to use the public chat in order to address those concerns of yours that you might have. In addition, if during the webinar you cannot see some of the slides, then feel free to double click on them, and that will actually allow you to view them in a full size. But before we start, it is Friday, so perhaps we might want to play a fun Friday game. Maybe anyone. So the main point will be is that all you have to do is just guess where at what level we will have the euro dollar at in 30 minutes. So that's going to be about at 3:30. And well, Riga time 3:30, but your time is different. But in any case, it's going to be like in 30 minutes. So think of a number where possibly the euro dollar could be. So maybe, and then the lucky person will have warm wishes from the Dukascopy research team to have a great weekend. So maybe that will be worth it, worth the playing the game, hopefully. But in any case, I hope you're going to enjoy today's webinar, and I'd like to welcome Maxime onto the whiteboard to provide us with an overview of the major events that occurred this week.
Thank you, Gita. Just a minute. Yeah. So, I'll make a small overview of major events happened this week, and I'll start with the United States. With earlier this week, the summary of commentary on current economic conditions, or just the beige book, was published. It provides support for the Fed chairman Ben Bernanke view that the economy growth isn't strong enough to bring about a quick healing of the labor market, and labor Labor Department report last week showed that while the unemployment rate unexpectedly declined in September, payroll growth slowed, and the report's description of the economy is not as positive as Beige Book earlier in the year, which used the word hmm? Can you hear me good now?
Yes, we can, loud
Yes.
and clear.
All right.
Yes, loud and clear.
Yeah, yeah. I think it's now better, no? Yep. So the report description earlier this year used the word moderate to describe the pace of expansion. While employment conditions were a little changed since the last report, several districts reported shortage of highly skilled workers, according to the Beige Book. And the housing market showed widespread improvement since the last report, according to the Fed, with all 12 districts reporting that the existing home sales strengthened, and in some cases substantially. So also, right here, show the picture. Also, the Fed Reserve Vice Chair Janet Yellen, here she is, took a word this week. Yellen strongly supports the Fed's unconventional monetary policies. And in her statement, she blamed Europe's troubles for some of the recent weaknesses in the US economic performance. She also noted emerging Asian economies had also begun to slow as exports to rich countries wane. And Yellen said that Asian economies could benefit from a deeper structural shift that would see a move away from the emphasis on export-led growth toward a model that is more reliant on domestic demand. Uh, so as for Japan, Yellen said high debt levels, slow growth, and aging population pose threats to the country's long-term fiscal sustainability. But she argued that, like in the United States, low government borrowing costs suggested that there was room for long-term budget shifts that do not threaten growth in the near future. And another important statistics from United States. So the U.S. trade deficit widened in August as slower global growth reduced demand for American exports. So the gap grew 4.1% to $44.2 billion from $42.5 billion in July. And the stagnant Europe and slower growth in China and other emerging markets may curtail demand for American products, which had been a source of strength for US manufacturers during earlier this year. So also application for jobless benefits dropped by 30,000 to 30 yeah 30 yes 33 no 339,000 in the week ended on October the 6th. So the fewest since February 2004. Labor Department figures showed earlier this week. And the economists forecast 370,000 claims according to the median estimate in a Bloomberg survey. What else? U.S. commercial crude oil inventories also, but just increased by 1.7 million barrels, and I think during the week, and I think they might something know about the future prices on oil, and I think that it's not the secret that many analysts actually believe that crude oil prices will rise in the near future. So as also one of the important actually events during this week is the IMF, World Bank, and G7 group meeting in Tokyo, and also the US delegation participates in that meeting, and I'll make a small summary about it a bit later. And as also yesterday there was a vice president debate between the US Vice President Joe Biden and Republican vice presidential nominee Paul Ryan. Actually, I didn't watch but I've heard that Joe Biden made a solid aggressive performance, and they talked about foreign policies and domestic policies. However, they both pledged that their parties' proposals would bring US unemployment below 6%. That's quite interesting, and I think we'll see that their performance during the next 4 years. So if we talk about the Europe, Gita, could you please?
Yes, I could
Yes,
please.
help me. Bring me back to the whiteboard.
Of course, because that's a very, very
Yes, thank
responsible
yes.
responsibility that somebody has to take care of.
Thank you. So actually nothing special I can say about Europe. There was a Draghi speech, and it didn't provide us with something important information. He just made evaluation of the European Systematic Risk Board and the European Bank Authority, and he said that politicians must continue fiscal reforms and that there are reasons to be confident on the euro economy and that there is need to rebuild trust in the financial system, which remains impaired, and some other stuff. So usual nothing, no exact decisions, no any suggestions about the future. So according, if we talk about Switzerland, the Swiss consumer prices fell 0.4% from a year ago and were 0.3% higher compared to this month. And UK statistics, UK manufacturing fell more than economists forecast in August, and the trade gap widened, indicating that the economy may struggle to regain strength. Factory output dropped by 1.1% from July, when it rose 3.1%. So also, and related to this, a marked increase in the oil deficit actually fueled a sharp widening in the UK trade deficit in August. So there is also, I will talk about the European representatives at the Tokyo meetings, but a bit later. And now about Asia. Gita, once again. Thank you. So, Japan's current account surplus expanded for the first time in 18 months in August, from a year earlier on a relative steep drop in imports and continued increase in the income surplus, according to the data from the Ministry of Finance. But the latest data did not signal a sustained upturn in the trend of the nation's current account surplus, as actual exports continued to tumble. And Australian unemployment has risen to its highest level in more than 2 years, as the job losses announced by some of the nation's biggest companies. The official data shows almost 40,000 extra people joined the queue last month, with unemployment rate rising to 5.4% in September, up 0.3% from the previous month. And that's probably the most important things in the Asia. And talking about the Tokyo meetings, I'll just bring to the picture. Yes, this woman, Christine Lagarde. She talked a lot during these meetings, and the most important thing that a group of 7 nations raised the possibility of extra fiscal measures if the global recovery weakens. Europe's woes are at the center of this week meetings of the World Bank and International Monetary Fund in finance, as finance chiefs work to sustain a global recovery. So, namely, the IMF managing director Christine Lagarde said Athens needs more breathing space, given the lack of growth, the market pressure, and given the efforts that have been undertaken. A bit more time is necessary, she said. The IMF change of tune on the speed of budget cuts stem from the research, which I talked about the previous, which was released this week, and showing that aggressive fiscal consolidation crimps growth more sharply than previously thought. And the IMF has argued that forcing Greece and other debt-burdened countries in Europe to reduce their deficits too quickly is counterproductive because it hurts the economy. And the shift was welcomed by some emerging markets countries, as well as long-term critics who say that the tough conditions attached to the IMF loans inflict undue economic pain and make it harder for countries to grow their way out of debt. I mean, but Germany, as the Europe's largest creditor country, pushed back and said a reversing course on promised deficit reductions would weaken credibility. On the other side, Spain's economy minister, Luis de, without to pronounce it correctly, but Guindos said that was absolutely no political resistance from within the Eurozone to a Spanish bailout request, as an apparent reference to Germany. Spain is under pressure to seek a bailout as it struggles to rein in central government spending. And US officials have expressed support for giving European countries extra time to deal with their debt. Also, IMF has advocated a slower approach to debt reduction. It also urged swifter policy action, both in Europe and the United States, to remove economic uncertainty and help lift an anemic global economy growth. However, many officials pointed out that the global economy is still growing and expressed confidence that Europe would find a way out of its mess. Namely, Portuguese Finance Minister Vítor Gaspar said that in Europe the decision-making process is slow and cumbersome, but it always delivered in the end. So no worries about the Europe. Also, Lagarde discussed the IMF role in the future, and she said that the 198-member global institution is a premier forum for global economic cooperation, and while multilateral institutions were important in the past, they will be even more important in the future. And she underlined three important roles of the IMF. She said that IMF must always be a trusted advisor on economic policies by sharpening its economic surveillance and analysis. It has the resources necessary to stand by its membership in an interconnected world, and actually the IMF has committed already I think 540 billion in the current crisis and disbursed 157 billion into 126 lending programs. That's quite a lot. And the institution also must reflect its global membership by adjusting its representation toward dynamic emerging markets. That's probably it for the meetings. And concerning also, I took some quotes made by finance officials in Tokyo, and I would place the picture of Timothy Geithner, the US Treasury Secretary. So he made some quotes about concerning the fiscal cliff. So he said, I don't think that the strategy of deferring and delaying is a responsible strategy. It might feel like an easy path at the moment, but it will still leave a set of big questions hanging over the country, and I don't think that it will help. He also added that our belief is that we can use the period between the election on November 6th and the end of the year to negotiate a framework of reforms that can be phased in over the time. The magnitude of the policy reforms we have to agree on and to achieve sustainability are somewhere between 2 to 3% of GDP. They are a very modest set of changes, and if you do it in a balanced way with a mix of tax reforms and spending cuts, you can do it a very good job for of gradual reforms and still create some room for investments, he said. And he expressed also support for the European changes, saying that even though they have a lot of details to work out, meaning the European politicians, the agreement on that basic framework makes it much easier for Europe to navigate what is going to be a long, difficult period of reforms. And also, some interesting words said the German finance minister Wolfgang Schäuble. I'll bring him on also whiteboard. So he said that there is no country in Europe which would give any thought to the question of abolishing the euro. Gita, what are you doing?
I'm playing around.
Don't touch Mr. Schäuble, please. So I'm convinced that we will be able to tell our friends and partners around the world that Europe is in the process of solving its problems, and Europe is aware of its responsibility. And we are convinced that in Germany and Europe, it is of the central importance that the public believes that there are reasons to trust the long-term foundations of our policy. And therefore, we believe that we will fulfill our international obligations with our policy of growth-friendly deficit reduction. That's concerning the current situation in Europe, and he also provided some word about Germany stimulate domestic demand. So he said that suggestions reveal not so great knowledge about Germany's situation. Domestic demand does rise in Germany, and we are the growth engine of Europe, and we will believe it is not helpful when one creates an impression that there are solutions that would be easier. And I don't believe in criticizing others. That's cheap. I would be much more reasonable when others would solve their problems and Europeans theirs. So he's quite aggressive concerning the German horse. And finally, I would stick to Christine Lagarde once more. He said that he made the comments on efforts by Eurozone to deal with debt crisis. As is often the case with the Eurozone, there is good news and bad news. Good news is the fact that this European stability mechanism that had been discussed and in the making for the last month has now been christened. There is a good news in terms of speed. The bad news is that for it to actually operate, there will be a legislative and often parliamentary process for the fund to effectively work. So that's probably the most interesting what happened this week, and if you have any questions, you're welcome to ask. But I think it's Friday. Nobody has a question.
Okay, well, maybe we will spare your soul for today, for the spirit of a happy Friday. I actually then wanted to put Zhenya onto the whiteboard, who prepared an expert commentator, but she has gone missing. So if somebody could please find Zhenya, that would be just great. But thanks, Max. Do you have any forecasts for the euro dollar in about 6 minutes? Where do you think the euro dollar will be?
Let me see what is current situation. All right, so it's 129. I think
last minute.
All right. Oh, it's going down. Right. In 15 minutes, yeah?
No, in 6 minutes. In 6 minutes, so you have only 1 minute left to decide.
All right, so it will be 1.2972.
Okay. Good. So try to. Okay, so write it in the chat so that nobody forgets, and there's no cheating afterwards.
What's the present will be?
Like in 5 minutes, exactly, perfect. So if somebody could find Zhenya, that would be really nice. Otherwise, I just have to go around the office and find her. Perfect, here she is. So the day is saved.
Thank you very much.
Okay, thanks, Maxim. So, Zhenya, thanks for joining us. Glad to have you back. I was worried that I'd have to go and search through the whole office.
Oh, no need, no need. I just experienced
Okay.
some technical problems, so it's okay now.
Okay, perfect. Well, thanks. Well, I know that you've conducted an interview on the euro dollar with Arne Lohmann Rasmussen. So what did he say? I mean, I know that you've discussed about the S&P 500 has downgraded Spain's credit rating by 2 notches. So was there any impact on the euro dollar based on that decision?
Well, first of all, Gita, um, just a second. uh, so it's okay, right? Okay, so yes, I hope everybody already knows that Standard and Poor's credit agency downgraded Spain's credit rating by 2 notches to a level to one level above junk status. So currently, Spain has, if I'm not mistaken, BBB minus rating. So but for the first time, this negative news was not that negative, and this news was not perceived negatively by the market participants, because it means that this pressure coming from the downgrade on the pressure increasing on Spain because of this downgrade, because currently Spain has faced that pressure is increasing in order to. Okay, let me start once again with this pressure. So the pressure for Spain is increasing in order to ask for a bailout, and this is positive news for euro-dollar because, as Mr. Rasmussen said, he thinks that this possibility and likelihood that Spain will ask a bailout could be very positive for euro-dollar. However, just after this downgrade news, we saw some sell-off in euro-dollar, but afterwards euro-dollar recovered nicely during the day, and the tail risk to the euro has fallen significantly. So he also said that they like the Danske Bank like buy euro-dollar on dips. So yeah, this is the main answer to the question.
And the downgrade also increased the possibility that Spain might actually request another bailout. So if that does happen, will this have some sort of an impact on the euro dollar? What did he say?
Well, as I have already mentioned, this is going to be a positive event for euro-dollar, and Mr. Rasmussen, does not see any other significant risks currently, and he also mentioned that the analysts from Danske Bank think that this OMT program launched by the ECB might be very effective in order to solve some issues in the Eurozone.
And what about then his forecast for the euro dollar? I see that there's a quite big line that it says 135.
That's right. They are very optimistic for euro dollar, and Mr. Rasmussen said that there is an upside potential over the next 3 to 6 months for euro dollar, and he said that the pair could reach 135, which is rather optimistic. This is based on the fact that risk of Eurozone debt crisis becomes smaller, and Spain will eventually ask for a bailout from their international partners. Well, that's it.
But do you think that, you personally, do you think that 135 is, a little bit too over the top positive? Because I do remember Max Baelti saying that the euro will actually hit 1.1, so there's a quite large discrepancy.
Well, I do think that it's too optimistic. Well, My personal forecast, by the way, I'm not good at forecasting, but still, my personal forecast would be around 128 by the year end. So I wouldn't be that optimistic.
Okay, thanks, Zhenya. So it's
You're
actually
welcome.
12:30. So perhaps if somebody could actually also indicate the level of the euro dollar so that we can finish up our interesting little game. And so before we do, I'd like to welcome. I'd like to welcome welcome Vakram from our guest from Research and Monitoring onto the whiteboard in order to discuss the U.S. PPI when the data is actually already out now.
Hi everyone, it's good to be back to the board. I'm wearing my best tie today for you guys. So today we have the inflation data in the focus, and the data has been just released. And it's will be interesting to have a quick view and to see what was the headline index and if the inflation data is gonna affect the market or not. Well, let's start with the previous data that we had in August. The headline inflation index came out at 1.7. It was actually the highest reading, the biggest jump in more than 3 years. And so, despite the slower economic growth, we had a strong increase in the inflation numbers, and this was mainly explained by the increased energy and food prices. And however, the core index came out at the level of 0.2%, which wasn't really too much elevated. So if we will look at the year ago change of the inflation numbers, we can also see that there's a sharp increase from 0.5% in July to 2% in August. So we can see that the yearly numbers are also starting to pick up a little. However, this is much far away from the readings that we had a year ago when the yearly producer price index was at the level of 5%. So now we have a much lower inflation, even though we can see that there's certain concerns that inflation is starting to accelerate. So the forecast for today's value was 0.8%, but however, as I can see in our JForex platform, the data uh, came out at 1.1%, so it's slightly above the expectations. However, the core data was even weaker than the forecast. The forecast was at 0.2%, and we actually had no any inflation in August. So we can see that the data are quite mixed. There is no any clear indication, and the market reaction is also very mixed. We saw that there was a small increase in the on the euro dollar, but however, it's back to the previous levels that we had before the release. So there is no any strong reaction in the market, and it would be really interesting to see how the inflation will evolve. The recent economic data has shown that there are some positive signs in employment market. We've seen that the the unemployment rate has decreased. The weekly claims are at the lowest value since 2008. And well, there are many positive signs that economies might start recovering, and this actually means that we should see a higher inflation in the coming months. And of course, the higher inflation is very dollar bullish sign. So speaking about the current situation on the euro dollar, we can see that the currency pair is in the triangle, in the daily triangle. So there is no any clear indication for today, but there are certain technical levels, and we should see how the situation will develop in the future. And well, that's it for the moment. Do you have any questions so far?
No questions, just compliments regarding your tie.
Thank you.
And not only from me, but also from actually a male community member.
Good to hear. Thank you very much.
Okay, thank you, Vakram, for the input.
Bye bye.
Bye. And to not to finish up, but actually continue the webinar, let's welcome the always positive Yaroslav to provide us with a sneak peek on the market research on the Japanese yen. Oh, and congratulations. Well, okay. Well, actually, with regards to the contest, well, Zhenya was, my camera freezes. Okay, I'll try to reload the page once I finish, but congratulations to Zhenya. She was almost close. Obviously, Maxim was the closest, but he said it like 5 minutes before, so it kind of counts, but not really, but it still does. So let's say finally congratulations then to Zhenya and to Special Effects, because they were kind of like in the middle of it all. So hope maybe that will be a small happy price. So you should have like a very fabulous weekend. And Yaroslav, you're obviously welcome to continue with the market research.
Thank you. Hello, dear friends, and in today's market research, we'll be looking at performance of the Japanese yen for the last 5 trading days, as always. And I assume that the risk-averse mode did not leave the markets, and it did not until the 11th of October, as both main safe haven currencies, of course those are the Japanese yen and the US dollar, extended their rallies amid some of the concerns regarding Eurozone's ability to cope with persisting difficulties. And in this sense, nothing has really changed. And we saw that even an extended, unexpected drop of the unemployment rate in the United States was unable to prevent pessimism from developing over the weekend into Monday. And Monday is usually the day when we see some market anomalies to occur, and generally it is believed that markets underperform on Mondays, and we saw that most of the currencies, most of the riskier currencies were actually bearish. However, given that the bearish tendency was preserved for the most part of the week for the general market, it appears to be more than just a usual pattern, and markets have been indeed expressing doubts of whether the global recovery will emerge soon. And talking about the constituents of the Japanese yen currency index, which are actually its crosses, we see that the only currencies that were in demand more than the Japanese yen proved to be the Australian dollar and its Canadian counterpart. And they have gained 0.1 and 0.16 pence against the yen for the last 5 trading days. Conversely, the New Zealand dollar weakened the most relatively to the yen, as the New Zealand dollar Japanese yen currency pair has fallen more than 1%, namely 1.3% during the observed period. And overall, the Japanese yen continues its ubiquitous appreciation amid yet unresolved world growth issues, and even in some places a risk of default for some of the countries. So in numerical terms, the surge of the Asian currency index amounted to almost 4% for the last 130 days, and it amounted to 0.1% for the last month. So the last month was not very much bullish for the yen. looking at volatility. Oh, no, this is not the charts I wanted to show you. So here we go. The kind of volatility we were used to observe in the foreign exchange market is actually absent from the market at the moment. And Dukascopy Bank Volatility Index hardly ever stepped beyond the level of 1, which the mark which represents historical turbulence. And some of the flurries of activity were very rare and incapable of significantly elevating volatility, being solely caused by labor market statistics, especially, of course, those coming from the United States, where the issue of unemployment is particularly topical due to constant focus of the Federal Reserve on the matter. Different fundamental news and events have a lesser impact, and mainly due to continuous factoring of their due to their frequent factoring into the prices of the assets, and in this case the currencies. The most volatile currencies observed for the week were the US dollar Canadian dollar, US dollar Swedish krona, and New Zealand dollar and the US dollar. So those three currency pairs are the most volatile on the most frequent basis, as they had exceeded historical variability values for more than 30% of the time. Moreover, a volatility index of these three currency couples also attained the highest figures among the constituents of the Dukascopy Bank Volatility Index, and those were 4.8, 3, and 3.7 respectively. So, and they are by far more volatile than the market on average, the highest value of which is only 1.8, so not quite high. Now turning to correlations, well, as always, we see that the Japanese yen exhibits a very strong influence on the markets, as its crosses tend to move unidirectionally. So if one of the yen crosses falls, then the other falls as well. And conversely, the same goes for the increase. So the correlation of these Japanese yen crosses is very high and direct. And we see that on average, as the average correlation coefficient depicts, is that it is very much stable, and correlation among the yen crosses are not subject to significant changes, as we have seen, for example, for the dollar, for the yen, or for any other currency. In fact, if we also compare distribution of 50-hour rolling correlation for the last 20 days and for the last 130 days, so on the chart below, we see that the median values have not actually deviated much, and the same goes for the means and other parameters of distribution. So more or less they stay the same and demonstrate stability and are very trustworthy if we use them for estimation of interrelationship between the currency pairs. So thank you very much, and if you have any questions, I'll gladly address them.
I see Thomas has a question, and he's pretty happy and excited. So let's let's put him onto the whiteboard. I see his Dr. Evil laugh. So what's then your question?
Hi yourself. First of all, thank you for your presentation. And the question is pretty short and straightforward since my trade pattern idea is on Euro-Japanese yen. So what is your opinion and prediction from your research in just upcoming, let's say, a few days, Monday, Tuesday, well, till the end of, basically till the end of this trading week and opening of next week? What are your insights and how do you see what's going to happen in the near future? So that's it.
I was a little bit distracted, but I think I'll be able to answer your question. So given the current context of the market, I do think that the risk-on sentiment should be restored in the coming week. So we saw that the market priced in the worst case scenarios, but since the Spain is likely to be bailed out, and at least for some time the time will be what for the Eurozone, I don't think there will be much topics for discussion that will dampen the optimistic outlook. And we saw that the ebbs and flows are very frequently changing in the foreign exchange market, and current sentiment I think is favorable for some gains in riskier currencies. So in this respect, I'd like to say that the Japanese yen is likely to retreat for now, so until other problems resurface.
Okay, thanks from Thomas, and thanks from us, Yaroslav. And let me just, yes, thank you for the input. I hope you have a wonderful weekend and a happy one. And let's just then continue with the market research. No, not the market research, the trade pattern idea. I just really enjoy market research so much, Yaroslav, that I wanted to continue even further with the market research. No offense to Thomas, of course, because his trade pattern ideas are always awesome. But thanks, thanks, Yaroslav, for the input. Thomas, yes, your awesome trade pattern ideas. So welcome to the whiteboard. And what can you tell us then about the Euro-Japanese yen trade pattern?
Okay, hi everyone once again. So as I and Gita mentioned already, so Euro-Japanese yen for our chart. And today we have a triangle. So the general idea for those who are not familiar or some just is that usually, well, of course, breakouts occur, but most of the cases pair continues to narrow its trading range till pattern support and resistance intersection, and usually breakouts occur somewhere near that level or near that time. So over here you can see that our widget in this case predicted, well, said the intersection is set and planned on 5th of November on 4 o'clock GMT at the level of 101 and 18. So it's somewhere, no, let me see, yes, somewhere around here. So we'll see how it works out, but of course I have to point it out definitely. Now about technical indicators, you'll see that 4 hour is rather neutral, meaning that one's point at appreciation, the other send buy signal, and one day we have a bit clearer view for way more buy, but the general idea is that I sort of predict that actually the pair will continue to move towards patterns resistance, and in this case maybe in the shorter term I would pay more attention to stochastic indicators. Well, they are canceling each other, sort of speaking, so I guess we'll see a minor bearish correction, since we see well, rather I don't know, not erratic, significant appreciation of the pair in today. This is what a 100 pip move, basically, which consisted in mainly in 2 bars. So I think some bearish correction should be in order, but after that, most likely pair will continue to appreciate. Now about the levels for the longer short traders. Well, first of all, long traders could focus somewhere, well, on the area of this peak right over here. And at the moment we have Bollinger Band, the daily pivot, and Fibonacci retracement. And Fibonacci retracement is made for, is predicted, let me see, for the pairs move, which is from 5th to 11th November, right over here, from here to here. So we see a rather strong and, well, clear movement. So it might be that pair is doing some sort of a correction at the moment. Then at the around 102.37, well, basically this starting from here, this whole area and further, we already meet patterns resistance, and 102.37 should be around the level where the pair should test it if it continues to appreciate in the same pace. Then 102.66, around there, we have excuse me, we have 102.66 and 81 right over here. And there is a typo with there, it's not 5th of October high, but 11th of October high. So I'm pretty sure this level will have some psychological effects for the traders. And then we move much higher for 103 and 6. And all the general idea is here that rather often we see pullbacks in triangle patterns. So it might be that if one occurs, you can see that this level is basically, oh yes, not the straightest line, but you know, you got the idea, we'll find daily pivot and patterns high right over there. So basically the start of the pattern, and it's definitely going to have some effects for longer period or longer horizon traders. And I wouldn't be surprised that quite a few sell orders would be placed around there. Now about for the situation for the short traders, 101 and 6 right around here, we find Fibonacci retracement 38.2, 101 and 2.3 right around here. We find Fibonacci 50%. So the situation where the price was the pair was bounded almost for 1 day, and this level just how to say lets me believe that this Fibonacci retracement is actually present, and the pair is let's say, if not fully paying the attention or respect these levels completely, but they definitely have an influence on it. Then it's 186 right over here, another Fibonacci retracement, and once again due to developments right over here, it seems that once it actually breaches and the pair moves, it's rather significant movements. And of course, way below we have a 200 bar simple moving average daily pivot, and well, most likely pair's resistance if the pair moves decides to depreciate exactly from this point at the same pace. And 113 gives us at the moment Bollinger Band. So and we also have what a recent low right over here. So I'm pretty sure, well, all the signs show that this might be also a clear pullback level if the pair actually breaks through the pattern support. The current market sentiment is bullish, but it's only 52%. So I think that this neutral longer term development where the pair will decrease its price range and actually will move towards 100 118, the intersection level is, I would say, highly likely. 60% of pending orders are to sell on 200 pips range from current market price. So again, that makes the rebound from pattern patterns resistance even much more likely. The only thing is, let's say, what Yaroslav was talking about, the market risk sentiment and appetite for the currencies. So you see that, well, euro is basically, well, sold in 51% of the cases, but as we know, that doesn't really mean much when the margin is so small. So it seems that, a lot of uncertainty are coming from euro and Japanese yen is sold in 73% of all cases. So that's a bit more, how to say, predictable. It has way more predictable power, and well, we'll see how it goes. So I'm pretty sure that due to this weird sentiments on the pair, it should be driven mostly by technical levels, and I really hope that the ones I pointed out are those, and traders will be able to um, work out something from these. So yeah, we'll see how it goes. And well, if you have any questions, remarks, then chat section or private message. And now getting back to you, Gita.
Okay, thanks, Thomas. No questions. Yeah, no question, just a few comments from Dr. TV, but I guess we can move to the end of our today's webinar. So thank you all. Let me just show you a few links. You definitely know them, but just in case if you don't, then maybe that could be also useful. But I also want to let you know that on the 22nd of October at 15 GMT, so note that down, we're going to have a webinar with Professor Lawrence Kotlikov from Boston University, and we're going to be discussing saving Europe with limited purpose banking in the context of Draghi's dangerous confidence game. So that is actually quite interesting, and Professor Lawrence Kotlikov has also participated on Bloomberg, so I guess you should definitely join us as well to be able to ask questions live via the public chat. But in the meantime, what I can tell you is that you can subscribe to our daily newsletters to stay informed about the latest webinars that we will be having, so you do not miss any webinar that would be of interest to you. You can also check out Spider, follow us on Twitter, and subscribe to our videos on YouTube just in case if you do miss a webinar, you can always watch it. But in the meantime, I also encourage you to take part in the Dukascopy TV webinar when they will be discussing China trading data expectations, the BRIC currencies and targets in focus, Singapore's decision not to change policy and stimulus, and finish up also with the weekly events wrap up. So hope you will be able to take part in their webinar as well. And in the meantime, then congratulations once again to Zhenya and Special Effects, who won our little guessing game today, but good luck to everyone next week, and thank you for being with us today. Thank you, and bye-bye. Take care.